You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tusall from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the option block.
All right, everybody. That rockin' bit of tunage means it is time to rock out once again with the option block, your bi-weekly source. Not so much bi-weekly this week, or indeed next week. We got 2 left for the rest of the year. We've got today, and we'll beam in one final one for you for the end of the year, the end of the decade. How crazy is that to say? Next Monday as well. Of course, we'll be off this Thursday. Let everybody enjoy a little post-Christmas, post-holiday glow. We'll be back again next Monday to break it all down for you. Wrap up the year, look ahead to 2020, all that good stuff. Of course, I got ahead of myself. My name is Mark Longo from theoptionsinsider.com. So excited looking ahead. I forgot to tell you where we are here, of course, coming at you live every Monday and Monday this week, usually Monday and Thursday, noon Central, 1 p.m. Eastern. You know how to get the live stream, mixlr.com, mixlr.com, place to go. Or, of course, after the fact, on wherever the heck you like to listen to your favorite podcasts. Keep those questions, those comments, those reviews coming. We do love to hear from you guys. And joining me on the program today, we've got Uncle Mike still on holiday assignment out there in parts unknown. But we are joined once again by that most steadfast of lobsters himself, the Rock Lobster, Mr. Andrew GIOVINAZZI, formerly of the number 1 options mecca in the country, Maine. Now a paltry, a dismal number 2. Well, let's see if he can make it back in 2020. Mr. Rock Lobster, how go things in the hinterlands, and how are your efforts? Regale us, sir. How are you planning to regain the top spot in 2020 in Maine, sir?
You know what I'm going to do is I'm going to start putting out Options Made Easy YouTube videos, 5 to 7 minutes, just to answer all the simple option questions people have. And I will try to do it in a timely and helpful fashion for everybody. So I'm going to go YouTube on, and I want my title back.
I know what you also have to do. You have to have a computer keyed up somewhere, and it just has straight up to the generic Google homepage. This has options typed into it. And every time you walk by it throughout the day, it has to be on all day. You have to just hit enter. You have to just keep searching, just generic options searches over and over and over again. And slowly over time, because you're the one person in Maine doing it, it will reverberate throughout the wilderness there, sir. And the next thing you know, you'll be back on the top number one in no time, sir.
That's what I'm hoping for.
We all have dreams. And we also are joined by the last emperor, Mr. Konstantin VRANDOPULO, holding down the active trader hot seat from Fidelity. Mr. Last Emperor, how are things, and how are your dreams here for the new year as we're wrapping into the end of the year, sir?
Everything is swell. Joining you today, I know that I was on Thursday, but my colleagues are out on vacation. I'm the only one here today, and I'm actually going up to New England tomorrow. So going up to your neck of the woods there, Andrew. I'm curious if you're kind of thinking about, the click farming, for your YouTube videos. Are you planning on hiring some folks to be getting you some clicks, get you up there on the top of the charts for YouTube videos?
I could. I didn't even think that far ahead. I didn't know such human beings existed.
Yeah, they're called unpaid interns. You should check them out. They're great. And you should just go throughout Maine and say, hey, whoever wants to click on options for me, just get it going. Just get it going. Get that title back, sir. Because DC, I don't know what they're up to down there, but somehow they managed to wrest the title from you. We'll see if that persists in 2020 as we keep on rolling into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block, the portion of the show where we break down what the heck is trading, what's moving and shaking out here for one of the final times of 2019. And, as we're coming into a relatively quiet, truncated holiday trading week here, the markets are kind of all over the place, actually. We're seeing S&P once again kind of actually the laggard, not even the Goldilocks. It's lagging everything else, only up about a little more than 0.1%. We've got NASDAQ up about 1/3%, and we got Dow. How often do we say that? Dow leading the charts to the upside, up 0.4%. A lot of that upside driven by some more action from our friends across the street. Yes, Boeing giving their much maligned CEO the heave-ho. That sends the stock, at least the Dow, up as well over there, but the stock as well, of course. He's not exactly a popular figure out there. I'll have to go peek after the show, see if the black SUVs are swirling and swarming out there in front of the Boeing HQ. To see, that's usually a good sign that there's turmoil therein. So that's interesting stuff. Of course, our old friend, the VIX, actually getting a little bit of a lift today as well. Kind of that weird moment. We were talking about it on VolViews last week, just what the heck's going on out there and how challenging it is for VIX to get markedly lower in this environment where the SPX puts are still bid, the calls are still cheap. A lot of other things going on with the VIX futures term structure, all this kind of conspiring to make it difficult for the VIX cash at least, to drift markedly lower right now. And we're seeing that today. It's actually up about 0.2 point to right around 1270. That pretty much puts it pretty much exactly up 0.2 point from where it was this time last year. Our old friend VVIX also drifting up a bit as well here, threatening that triple-digit level again, right around 99.75 coming into the show. And our old friend VXX also joining the party, drifting slightly up, kind of unched from where it was last year, right around a 15 handle as well. Let's go back out to the active trader hot seat. Mr. Last Emperor, sir, what is lighting up the tape in the Fidelity land on this relatively quiet holiday week, sir?
Yeah, guys. So, for a relatively quiet day, we actually have quite a few names making some big moves. So Fidelity folks are trading a couple of stocks that are right at the top of the list that I have never heard before or seen. So the number one spot is the ITCI ticker symbol, Intracellular Therapies Incorporated. It sounds like, they're up about 200%. They've been halted for volatility several times today. A huge jump on the news that FDA approved their schizophrenia treatment drug, I guess. So, this is a name that is one of those names that generally has, potentially either a huge uproar to the top side, right, or the drug fails and the company kind of, doesn't go out of business necessarily, but probably goes a lot lower. The option markets were pricing in very heavy volatility in the monthly contracts. I looked at them. There were 360% annualized IV vol for 30-day options. So, it's not that this, I guess, news announcement was unexpected. Option players were in there prior to this, but nonetheless, stock is up $24 right now, and I was looking at upside calls. It looks like the exchanges are already adding calls that are trading in the range of 30 to 50. Stock was at $13 on Friday, so new strikes are coming up on the board, but everything that was at or near the money on Friday in the January monthlies is up 500 to 600%. So even with that, amazingly juiced up volatility premium that was built in, I guess it moved by more in one direction to the upside. So kind of a crazy name. Fidelity clients are split right down the middle, 50-50, but it is a stock that is trading very heavily and very actively. About 3,000 orders on each side, so that's a pretty big one. Boeing is number 2, as you've mentioned already, Mark. Boeing got those news, so the CEO is sacked. The stock is rallying 2.6%, up $8.50 right now. Fidelity customers are leaning to the buy side, and that has been the case, even kind of in the face of the most recent troubles in the stock price action. Every time, at least, I'm coming on the show and I'm mentioning this name, Fidelity clients were leaning to the buy side. So right now, 56% buys, 44% sells. Number 3, good old Tesla. So, Mark, last time I was on, you were talking about how interesting it would be and what is going to be said when the stock does hit 420. And what do you know, right? A joke goes out on Twitter, and the stock is at 420, right? So, pretty insane, up 75% in the year. I mean, just an incredible story that turned from being very sour to to basically back up there those previous highs. I was looking at a longer term chart, guys, and over the past couple of years, it's been trading with a ton of volatility, but relatively sideways, right, against resistances and supports, and these last couple of weeks has really broken the stock out and up to new relative highs that we haven't seen really over the past 2 years. So interesting name. We'll see, if the craze continues, what will come of it. But it's amazing that stock of this size can move by a dramatic amount just on the tweet, a joke, I guess. The next one is Apple, and Apple is generally at the top of the list. Apple's been upgraded, I think, the price target for them, $325 to $350 at Woodbush, and the stock is up nicely, 1.5%, up 4 points right now. Fidelity customers are leaning to the buy side, 57% buys, 43% sells. So, just looking at the top of the list, and as you gentlemen know, we kind of, we get a list of the 30 most actives, generally mention 3 or 4 at the top. But, it's just amazing on a relatively sanguine day. We know that we're into a shortened week here in the Christmas week. But, companies of this size moving by, a drastic amount is kind of not necessarily what I would have been expecting coming into this week, especially, with the rise in broader indices that we've seen over the past couple of months. So, I guess it's good to see the bulls are definitely out in parade, for sure.
For sure, indeed. And this also continues and just reinforces my thesis that the Fidelity Legions just can't get enough of cheapy biotechs that you've never heard of, because you guys they love them. And any given day that ends in Y, they're slinging some sub $10 usually pharma or biotech that you probably haven't heard of and has some crazy drug coming out that apparently the Fidelity masses are hip to over there. So yeah, who knew? The Fidelity Legions so into your small little biotechs and pharma names out there. Mr. Rock Lobster, not really into the biotechs and pharmas, but he's into a little thing called VIX and a few other things. Mr. Rock Lobster, what is lighting up your tape out there today, sir?
Well, I put a little graphic for you in the chat box. So when the little birdie speaks to you, you have a little reference. So I got questions about, we had Mark and I got questions in our option pitch show on Friday about, is this like the Volpocalypse month of January 2018? Because we have SPX going up and VIX going up. And part of the reason why we have the zone of the monk, right, that really low 9 to 12 range in VIX is that usually is the vol area where there's willing sellers of vol. Where like people are selling puts, and they're like, we're selling it. It's cool. Everything's great. So before the Volpocalypse, we actually had those 11, like low 11 vol numbers. So I sent a snap to Mark, and that near-term future was actually in the 12 handle on the 24th of January. 12.22 actually. So after VIX expiration, we had the curve was pulled much down. So even if you went 90 days out, vol then was 1357 on January 24th, 2018. That's a 90-day vol number, 90-day future. If you go to the 90-day future today, that is, we're looking at like April-ish, is more like 1727. The 85-day future is 1680. So it's 3.5 points higher. So the market is bidding the future vol much higher than it did in 2018 already. So this is more of everybody. I'm not going to say everybody, but the market is definitely more primed for vol falling, for the market to fall, right? In 2018, January, it was like that month was crazy. We were going straight up. We had low VIX volatility. We had extreme realized vol. We were going those huge straight moves up. And we had very low future premium. So what I would say is it's a different, and to me, when I look at vol, very much like different patterns emerge. But the patterns are similar to the type of market condition people are looking at. So right now, you have a bid for vol. There is some scarediness, right? There is whatever, because the vol is bid. 2 years ago, you didn't have that bid for the vol. So that I think there's a slightly different tone and flavor to what's going on. And that's what I would say. So that's where we are right now. You had and here's the funny thing. The February contract, right, which was the near-term contract, 12.22, right, and then during the Volpocalypse, I think it settled like 30-something, right? It was probably one of the higher settled contracts that I can remember in the last like 5 years. So, and now that, that bid is there. So I think, people, or there's definitely bid for those options, and I don't know what everybody's waiting for. They're just waiting for all the good times to end or the trade thing to not happen or something like that. But my view is they are much more bid for a move now than they were then. And back then, the actual curve was under a lot of strain, meaning those future prices were relatively close to the cash for a pretty good time to go to expiration. So there is usually, when there's compression in the futures, it's actually it's a much better tell of market movement than what we currently have right now. It's sort of nobody was buying protection then, and everybody's buying it now, if you want to think of it like that. So very rarely are things so well telegraphed going forward. So to me, I honestly think it's kind of bullish. If Tusa was here, he probably would agree. But I can't put words in his mouth because he's Uncle Mike. But that's my take on vol for right now. And I just think we're going up till we have a reason not to anymore. So that would be my take on the vol. But I'm using vol kind of as a bit of a backstop for that.
Yeah, that's interesting. I'm looking at your data points you provided here. Maybe we'll copy these out and tweet them out to the masses so they could see it. They're following along live. This is a shot from the VIX futures term structure back on early January. It's not quite the same day. This is about a month later, January 24th of 2018. What's interesting in that too, Mr. Rock Lobster, is if you look at this chart, because you're right, they are pricing it out at the time, that front future at 12.25, and then kind of getting up from there. And we think of, early 2018 as being madness, and certainly the tail end of January into February was. But interesting stuff coming in. Of course, we had the end of the year. Everyone thinks of December as this tranquil time. But, of course, a year ago, which obviously wouldn't be reflected in this, but a year ago, we were one day away from the great nadir of the market. And who knew it at the time? Christmas Eve, the great sell-off, vol spiked. We actually came into, everyone forgets, we came into 2019 with the VIX around 25. We were at a much higher regime back then. Obviously, it was unsustainable. We kind of came off pretty quickly. It wasn't this new era of higher volatility north of 20. But still, we came into this year roaring like a lion. We're going out kind of like a lamb. And interesting stuff. Let's see how all this volatility at the start of the year and now kind of dwindling towards the end of the year, how that's playing out here from an overall volume perspective. If you're coming into today looking for some action on the VIX front, you might as well go home. Not a heck of a lot going out there. 63,000 contracts on the tape as of just a few minutes ago. The ADV still shy of 500K, about 486. Heck of a lot higher, about 100,000 higher than it was a couple of weeks ago. So that's nice. But still shy of where it usually is. Of course, it's seasonal quiet time, so not exactly surprising. SPY at about 1.3, actually doing decent paper out there for kind of a nothing day. The ADV about 2.6 million. The S about 650,000 contracts on the tape. The ADV about almost 1.25 million out there. The Q's at about 377,000 contracts. The ADV, again, just a tick under 500K out there. And the Russell, aka IWM, failing to even do 100K out there. The ADV is about 300K. Let's go out to the most actives. Let's see if we can find some fun out there today. Cost you a paltry 88,000 contracts to break into the top 10 today. That'll get you to Amazon level. Got looks like mostly names you're heard of and familiar with here in our top 10 today. Number 9, NVIDIA, 89,000 contracts on the tape. Number 8, Netflix, $1.03 on the tape. Number 7, Micron, $1.10 on the tape. Number 6, good old Microsoft, $1.17. Number 5, our friends across the street, Boeing, $1.62. They're tied for number 4 with Facebook, also at $1.62. And number 3, AMD, $3.12. We jump up quite a bit to 312 over there. That's an impressive leap. AMD lighting it up yet again. Number 2, Apple, doing a fairly impressive 432,000 contracts on a fairly nothing day out there. But number 1, we talked about it before, it cannot be outdone today. Tesla closing in on that 420 stock price, and of course that means the options closing in on nearly 450,000 contracts out there. Number 1 with a bullet out there. Let's see where our biases are lurking in the paper today. Looks like 74% is leading the tape, and that is on the call side for Facebook. Today, outside of that, 72% for Microsoft, and then it's all pretty much in the 60s, which is kind of usually where we see it. Tesla actually pretty even, about 56% on the calls, 44% on the puts. So kind of both sides paper lighting it up out there. That kind of backs up what we've seen out there. You guys love it or you love to hate it. Either way, you like it, you talk about it, you trade it out there in Tesla land. All right, let's see. Obviously not a lot of earnings lighting it up out there this week. Most of the major names pretty much reported or taking the week off out here. If you like some nuggets, as we're kind of coming up on the end of the year, if you like some nuggets on how things have been performing, not just for the year, but for the decade, a lot of people are out there crunching numbers, crunching the list. This particular number is happening to come from investing.com, but a lot of different places have crunched the numbers on the past decade. Obviously, the decade not over. Still got a couple, about a week and change left. But looking at the SPX, that's been kind of the horse to bet on over the past decade, particularly if you look at taking the dividends and piling them back in, which a lot of people do. It's over 250% now up for the decade. So one of the best decades in its history. Not quite the best. We'll get to that in a second. If you're wondering, they looked at some other aggregate asset classes like bonds, Not exactly a good time for them. They looked at the Barclays U.S. Aggregate Bond Index. That includes treasuries, a bunch of other things. That's actually up a paltry, a meager 47%. Our friend out there on TWIFO WTI, kind of a bit of a lost decade for that one. It's off 20% over the past decade. Let's see here, some other interesting numbers. If you're wondering, is this the best decade in SPX history or S&P history? Not quite. It's up there, though. Dating back to the 40s, that's the data they have. The best decade, you could probably guess what was the best decade, the go-go 90s. The S&P was up over 300%. And the 50s and the 80s, both of them were in the similar range where they are right now, north of 200%. So it's certainly up there for a great decade, but not quite the best. If you're wondering what was driving that, take a guess. It was tech, up over 300%. Consumer discretionary is also looking pretty good, also up 300%. Obviously, energy, kind of the laggard there. It was actually up, the energy sector, but just barely up about 4.5% over the course of the past year. Interesting stuff out there. If they want the best gainers for the decade, actually Netflix, interesting, up 4,100%. Again, all these names were not around a decade ago, so it's kind of hard to measure the span of a decade. A lot of the hot names we're talking about today, like Teslas and others, are kind of hard to get a decade's worth of data on them. Apache was the worst, down 80% over that 10-year time. Okay, so this is a few interesting little nuggets. And since we're talking some nuggets and some names, our to be reviewed, to be watched column has been overflowing since we've been adding so many names to it. So let's pay a few of those off now with a little bit of the old odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, this kind of one of the year-end review shows we're doing. Not quite looking back at the full year yet, but looking at some of the names we've talked about recently and see how they fared. So, Mr. Rock Lobster, did you put on your proper reviewing pants for today, sir?
I did. Actually, instead of my pants being on backwards, I put them on straight today.
There you go. That's usually a good first step in the morning, I find, to starting your day off right, is putting your pants on the right way. Let's kick things off. Let's actually not go back too far. Let's go back a mere week. So even your mentally challenged memory there, Mr. Rocklops, should be able to recall this one. This was Nike. We talked about them a week ago on the 16th here on the show. And someone was piling in, looks like for some pretty strong pre-earnings call love. At the time, Nike was about to announce earnings. They had them on the 19th. Those are 3 days after this. And we profiled someone coming in for the DEAS 102 calls. That was a little bit out of the money at the time this trade went up. This trade went up on the 16th. The stock closed at $99.81 on that day. Someone piling into 11,250 of the DEAS 102s for 76 cents. Worth noting, this print was late. It was up, so the market was 73 at 74, so we have to intuit a little bit what was going on. But it did, a bunch of size did go up on that day, total of 18,000. Also worth noting, as we talked about on the show that day, they did these calls tied to stock, and I tend to like that a little bit less. I think the Rock Lobster concurred with that as well, because it makes it another obstacle to kind of overcome. As you're already trading earnings, so it's a bit of a crapshoot, and now you're adding the stock leg to it now, and it makes things a little bit more challenging. Looking here, that was the big day, 18,000. We did see more go up, ironically, more trading on this stock on the 19th. 8,000 more, but that was actually additive because the OI gapped up from about 13,000 to about 17,000, almost 18,000. So people were piling in with a day to go. And on the day of expiration, the 20th, only a little bit less than 3,000 actually traded. So these were pretty much still open on expiration because the stock never really got there. Remember we said on the show, listeners, when you're doing them tied, obviously the customer probably buying the calls, so they're selling stock against it. They're hedging out the delta component. I don't have the delta here. They did it. I'm going to assume they did it delta neutral, not 1-to-1. That's the more common way to do this. If they did it that way, effectively you're taking out that delta component, which is where most people are actually coming for in the earnings. Usually they're looking to swing for that delta component. You're taking that away. You're trading effectively to pure vol. I know saying that on a contract that's going away pretty soon. Kind of hard to say vol, but it's an earnings trade, so we know you have a lot of that pent-up vol that's probably going to come out pretty hard after that fact, which makes his trade even harder to pay off. So yeah, the stock didn't really go his way. It got close. It peaked out on at 101.15 on the 19th. So getting there, but not quite. And then coming into expiration, there said about 17,000, almost 18,000 and change. So it looks like Mr. Rock Lobster, it seems like, hindsight being 2020, this guy took a bath on these, and these calls pretty much went out worthless. It never passed 102, never really got close. So it looks like if we just look at it straight up on the option, just on that one print he did, he lost not quite $1 million, pretty close, about 850,000 on the options. Obviously, we don't know the stock in terms of what he did with it after. We know where he sold it, but we don't know if he still has it. If he does still have it, he's at about 40 cents on the stock as well. So he's probably down somewhere around $1 million on this trade, all things considered. That's not even counting the other contracts that went up after the fact, which puts this up probably north of $1.5 million. Again, this print was late, so we have to do a little bit of the tea leaf reading here to intuit what was going on. But it seems like that was the case. Mr. Rock Lobster, are you on board with that train as well? You think this guy pretty much bought these, did them with stock, and looks like they probably didn't work out in his favor, sir?
I think the way it looks to me, I think the guy ate a poof sandwich. He put it on and poof, it all went to nothing. You know what? He could have just listened to our show for free. He could have got that information for free. That was a tough trade for Nike. It's one of those, when you're trading options versus stock, which is actually a trade that I like a lot. But you really need like that big you need a big move to make it work. Earnings, it can happen. I don't think it was an unreasonable bet for Nike, but it just did not happen at all. So I think, sometimes, too, you could lose twice depending on where the stock was because you got the options don't rally enough, and then your short stock rallies in your face, and you all know, and you remember what that feels like when volatility compresses and the stock goes up, and you get drilled twice. It's a pleasant feeling.
The joyous feeling. That's when you go to series early in the day and just like, I'm done.
Yeah, like let's see, it opens 8:30 and you're there at 10:30 because it's not going to get any better.
Yeah, I knew my guys are having a bad day. And where are you? Oh, I'm at series, and it was like 9:42. I'm like, oh, this is nothing good is happening for them on this day. All right, let's keep on rolling. So yeah, we're going to factor that guy in the. Looks like he lost some money camp, probably around $1 million, maybe more, all told. If you look at the later paper as well, let's see if we can turn things around a bit, Mr. Rock Lobster. Next up, you recall this one as well. This is actually a pretty recent one as well. This is back on the 2nd of December. You remember this one, Mr. Rock Lobster? It was this REIT put Palooza in these these outlet mall REITs. You remember this one?
I do. Wasn't there like 2 or 3 put sales?
Yeah, there were 3 of them.
Kind of simple ones.
There were 3 of them. We're like, what's going on with these? And someone pointed out in our chat that they had all been profiled in Barings. Barings. I'm going back now. Barings is gone. Barons over the weekend here. So let's see how these fared. These all went up on December 2nd, listeners. There's a bunch of looked like line in the sand puts here. Let's start off with the first one. It was Tanger Factory Outlet Centers. Someone blasting away on nearly 14,000, 13,828. The D's 15 puts doing these for 21 cents. Remember at the time, listeners, we kind of speculated. It seemed like these are all pretty close to the money. It seemed like someone maybe was looking to pick up some stock in these REITs. Let's see how this fared. Tanger at the time closed at 1567, so a little bit north of that 15 strike, but clearly close to the fire. It could have happened. On expiration, actually, it did happen. The stock closed at $14.90. So these puts went out in the money, about a dime. Worth noting, there were about 18,000 of these still open on expiration. Only about 4,500 traded that day, so not enough to clear out the total OI, let alone the nearly 14,000 that printed on that one day there as well. So a lot went up on the trade day, and they were still open. So it looks like someone, Mr. Rock Lobster, bought himself some stock for around about $14.79 or so. If that's the case, he's probably regretting it already because his stock's down to about 14.5 right now. So he's down, about another 26 cents or so on this trade already. So far, Mr. Rock Lobster, it seems like we're kind of 0 for 1. But hey, looks like this guy probably wanted the stock. Are you on board with that one as well, sir?
I think so. By the way, all like this whole retail concept thing, this is a big, I love it when the market hates a whole sector. Like they're literally saying this sector is done. It's kind of like the oil patch right now. I haven't done anything in it, but I'm, now it's on my radar. I'm watching. So, but I think this person did want to own the stock, and they wanted to own it at a better price. And so far, they got their wish. So it is for sure. It's an interesting trade, and to be honest, like who knows what is the retail malls going away? Is Amazon going to take over? I don't know. It's definitely as a trade, it is interesting. I have not done anything with it yet, but it is starting to call me a little bit, I have to admit.
Yeah, it does seem like someone read that Barron's article and said, hey, I think this sector is overdone, and I'm going to buy all of it, because he wrote puts in a bunch of it. So, yeah, it's hard to say it's a winner or a loser. Near term, it's a loser, obviously, because the stock is down, and the puts expired in the money. But he obviously wanted the stock, so he got what he wanted. So we'll see if he feels this whole sector is a little overbeaten down, then it could be long-term looking pretty good. Let's look at the next one, see how this one fared. This was in Macerich. I think that's how you pronounce it. Macerich, Macerich, maybe? Maybe Macerich, if we're getting old-school Greek on it, maybe. But let's go with Macerich. And let's see, that is ticker symbol MAC. Someone also blasting out line in the sand there. Interesting numbers here. 12,316 of those. The D's 25 puts for 16 cents right off the bid there as well. On the day of the trade, the stock closed right around 26.5. And on expiration day, it was pretty much the same, about 26.5. So the stock never really moved. So it seemed like never really threatened the 25 handle either. So it seems like our friend here, he ended up picking up the 16 cents this time. So maybe he didn't get the stock that he wanted, but he got nearly 200K on the trade. Worth noting, someone came in and added more the next day. We profiled, there were about 12, almost 13,000 going up on the second. Another almost 9,000 trading on the third. Most of that was additive. The OI grew. So someone liked it more the next day. So someone drew a pretty aggressive line in the sand, and it didn't really get hit. So someone pocketed around 200K on that initial trade. The other $8,000, another probably a couple hundred, another buck or so on that. So yeah, this guy's looking all right, at least from a premium perspective. But he didn't get the stock he wanted. So I guess that's going to color your viewpoint a little bit. And then last but not least, we've got Taubman Centers Inc. These were also line in the sand puts. Oh, by the way, Macerich right now trading 26.25, so still north of that 25 handle. So our friend always has time to come back out and write those again. Now we got Taubman Centers Inc. This is ticker symbol TCO, another REIT that invests in outlet malls. Someone coming in blasting away on the D's 30 puts for 22 cents, 6,413 times on the day of the trade, which was also the same day, the second. We saw the stock closing right around $32, $31.99. On expiration, it closed a wee bit south of that, at $30.35. And it actually broke through the 30 handle ever so briefly on the 17th of December. So in the lifespan of these options, this guy was sweating a little bit. If he did indeed, if he just was selling the puts, he was sweating. If he wanted the stock, then maybe he was all right, but it was still below his level. It was down to $12.59 on the 17th, so obviously he was a little bit below where he sold those puts for. Worth noting, these bad boys were still open at expiration because the stock rallied back north of the 30 handle. Again, close to it, 30.35, so he was threatening to pin for a little bit there on expiration, but the stock closed north of it. There were still about 11,000 of these bad boys open, so it seems like our friend here sweated it out, but it ended up working out in the end. He pocketed about $1.41 for his trouble. So Mr. Rock Lobster looks like he lost, what do we say about, he got his stock, but he lost some money on the Tanger ones. But then Macerich and Taubman, he made, looks like nearly 200K and about $1.50, so about $3.50. That makes up for the money he lost on the Taubman one there, or assuming the Tanger one. So what do you think overall on our friend line in the sand here? How do you think he fared?
It seems like he's doing okay, and he's taking that one, and he's got a little money in the bank against the loss at this point. It feels like, too, this is like, like one of those end-of-year tax plays where stocks that everybody hates, then at the end of the year, like, okay, people are going to take their tax loss there. It presses them lower, and by the first of the year, they bottom and rip back up. I mean, it's a common end of the year trade, and just this is a sector right now. I mean, S&P 500 all-time highs, and these are just in the ash can basement. So it's possible that this person was smart enough to to trade that. It'll be interesting to see how it comes around. They're all at about the same. I mean, they're all mostly at about the low points that they've been trading. So there's time. There's still time. But an interesting play nonetheless. I'm going to go into the camp of possibly around the end of the year tax loss thing, and then they might recover a little bit. And I think that's what the line in the sand person was hoping, because it was a fairly aggressive line in the sand, but there's not a lot of juice in these things anyway. But my gut says that it's going to end up being an okay trade.
There's an article right now coming out a couple hours ago. Taubman's tenants are selling record amounts. Tenant sales were up again, marking the 13th consecutive quarter of growth. So maybe our fellow here is looking for some stock. Maybe he was onto something. Meanwhile, let's see if you guys are onto something with a little bit of your mail block.
It's time to take your seat on the All-Star Panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Monday, usually a bit of strategery. Uncle Mike on holiday assignment, so we thought we'd open it up to you guys to end the year here with a few more of your questions. Also like to pick the brains of the Fidelity Legions out there, see what you have on the brain. And Mr. Last Emperor, it sounds like the Fidelity Legions have the old DNE, the old do not exercise, kind of an arcane one. They have this on the brain these days, Mr. Last Emperor?
Yeah, guys. So I wanted to dedicate a little bit of time today to discussing this because it does come up actually a lot more frequently than you would imagine. Me and Trey sit pretty close to our trading desk, and we actually, at least once every Friday hear a call coming in from a client requesting that. So let me kind of backtrack a little bit. When I was on the show on Thursday, I wanted to make sure that everyone was aware that quadruple witching was coming up on Friday, the 20th, and that meant that SPY was going ex-dividend. So, very important to understand that if you're short options going into a dividend event or an ex-dividend date, and they're deep in the money, you are, running a much greater chance of being assigned early. And in fact, right, it happens every single quarter, and someone, gets hurt. In an example that actually was a conversation that was had on Friday was a situation where a gentleman was short some deep in the money call spreads on SPY and going into the event, and didn't decide to roll them out, got assigned. Of course, you're short stock, right, overnight, and you're going to owe that dividend to the contraparty. Now, granted, Friday was a very positive day. SPY rallied, I think, and took back most of that ex-dividend adjustment, relatively speaking. It paid $1.57. And the stock rallied to the top side. So if you were short stock and you still had your long calls that you didn't exercise, you probably got most of that money back, at least that you would have to pay, right, to the person who you owe the dividend to. But it's a situation that you definitely want to avoid because it creates all sorts of issues. There might be even a possibility of your account not being able to support a position size that you're controlling through options. And, sometimes maybe you can't even find stock to short, right? So you get bought back in at a time where, you potentially wouldn't be preferring to do so. So it creates a big, a serious bump in the road, depending on the circumstance, right? The market didn't have to rally on Friday and kind of save the situation. They save the day, right? Because as a long call holder, you don't benefit from a dividend payment. So the market kind of bailed that person out, which worked out, but it doesn't always work out that way. And if you go back and look at all the quarterly dividends, obviously you can see those adjustments in the chart. So beware. If you don't want to deal with that scenario, all the complexity behind it, just roll out the position, right? If you have the position on and it clearly didn't work out because of your original strategy, have an exit strategy in mind of some sort. And if you don't have an exit strategy, at least make sure that you have time on your hand, right? So all sorts of problems arise, and that goes into the do not exercise side of things. So the question always is what are the chances of me getting assigned early? Well, we know that if we're trading American-style options, you could be assigned at any time. And it doesn't necessarily mean that the transaction has to make financial sense, right? If you're looking at your short option and you still have time value in that option, we have seen situations, right, where you get assigned even if there was time value in the option, right? It doesn't make financial sense, but it happens. Here at Fidelity, we have a random process of assigning. So the Options Clearing Corporation obviously sends out the notification to all the brokerage houses that have short contracts, right? And then, each brokerage house has its own process. For Fidelity, it's a randomized process, so we're not choosing and picking who's getting assigned, but just rather randomly assigning an account. But folks normally ask, like, hey, what if what if I am long call contracts and my account cannot actually handle, right, in size an exercise, for example, right, going into a Friday expiration, or in the case of SPY, a Monday or Wednesday or a Friday, depending which one you're trading, right? If you want to be in control of selling the option contract at any moment, taking that action yourself, right? What generally the brokers would suggest is, listen, if your account cannot handle the exercise, which we know that if an option is at least a penny in the money at expiration, you will be exercising your right to buy the stock, right? Or to be shorting a stock if you're long a put. And, if the account is too small, the margin clerks generally kind of get on those accounts and get the notifications up. And, if the client is not taking action on their own, the account's too small, doesn't have enough cash, right, they would sell the contract in the open market on your behalf, right? So there's some folks out there that say, well, you know what? I don't want a margin clerk to be in control of my account. I actually want to be in control, and I want to be trading that contract, all the way through 4 o'clock. I don't know. I don't want to sell right now. I want to hold it until I'm blue in the face, right? If that's the case, you can request the do not exercise instructions to be put onto your account. What that means is, if you get them put on, you forfeit, right, any right to purchase the stock or short the stock, depending on whether you own a long call or a long put. And there was a real situation just this Friday where a client apparently was long some very deep in the money Netflix options, call options. I think that there were 40 points in the money or so. Called and requested the do not exercise instructions put on, but forgot to actually sell the contracts in the open market. So, what happens, right? You forfeit your right to buy the stock. All of that intrinsic value is basically up in flames. You need to understand that if you do put in the do not exercise instructions, it is 100% on you to make sure that you're actually selling out of the position before the close of business. I would suggest not even pushing it that far, right? If you, and that goes back to the exit strategy discussion. If you're trading an option that is expiring that day and you're waiting for the last minute or the last moment to trade it, what is going to be the circumstance that you're dealing with? What is going to be the bid offer spread? 15 minutes or half an hour before the close or 5 minutes before the close. You're only, able to trade out of the contract, especially if you're trading size, or sell the contracts for whatever someone else is willing to pay for it. So you're in the mercy of, that circumstance of the liquidity provider or market maker, making sure that, they're taking the other side of the trade. Obviously, more liquid underlyings probably don't face similar troubles, but I would say that have an exit strategy ahead of time, regardless of whether you're making money or losing money. If you want to be prolonging, right, the strategy from the perspective of time, make sure that you roll, right? Adjust it in some way to make sure you're not dealing with those strenuous circumstances at the end of the day, and God forbid, putting do not exercise instructions on, and then forgetting to sell the contracts, right? Thinking that you're going to own the stock because it's in the money. So that's kind of, I guess, part mail block, part troubles that we see every single quarter on underlyings like SPY and QQQ and IWM, because those particular underlyings, we know that the dividend quarterly dividend is coming. This just doesn't get announced by companies, right? If you go to a State Street website and you're trying to look for the specific date on which SPY is going to be going ex-dividend, it's nowhere to be found. You could look at historical payments and say, okay, this is generally when it pays that quarterly. So, it's a tough business. If you're not used to trading an underlying, make sure that you know everything about it before you put the position on. So that's just kind of a word of advice from myself, being a trader on the desk. I got the strategy desk position, and happens a lot more frequently than you would imagine, and it's not necessarily something that you want to deal with.
Definitely not. Let's look in here. We're kind of come up against it. See if we have any short questions. A lot of yours are pretty lengthy. Calculating margin, time decay, Canadian credit spreads, all sorts of interesting stuff. I think we'll get to them. I think we'll do like a listener mail palooza to wrap up the year next week on the show here as well. So we'll get to a lot of those. We'll wrap it up here with some quick ones. Comments. This one comes from YouTube from Mars Jane on our show. It says neat. Well, glad you like it there, Mars Jane. It is funny to me how many of you are consuming the shows now via YouTube. Hey, if you like it, go for it. It's not our go-to platform, really. It's not really how we envision the show being consumed. But if you like it, again, it's kind of an automated ancillary function of our distribution platform. They also put it out to YouTube. If you like it that way, go for it. The more the merrier. And if you think it's neat, like Mars Jane, well then, glad you guys are liking it. Meanwhile, it's time for us to keep on rolling to our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's do it. It's time to go around the block. We're going to go a little bit farther than we normally do this time, because usually we go till later on in the week when we come back on Thursday, but we'll be taking the day after Christmas off here on the network. So we're going to go a little bit farther, all the way out to next Monday. So let's start with the Rock Lobster. Mr. Rock Lobster, sir, what is on your radar for the entirety of the next holiday week and through the weekend until we gather back here together on Monday, sir?
That's a good question. I'm watching the same stuff I was last week. Is the market pre-bought in protection, which I kind of feel that it is, at least the way I measure this kind of stuff. And will the rally hold till the next trade announcement? So I think up into the end of the year, unless there's something to upset the apple cart, I feel like that's where we are. And that's about it, really. I mean, I think it's a bull market. In general, bull market, calls are your friend. I watched a lot of crazy bull markets in my life, at least 2 or 3 of them. And ultimately, low vol, stocks moving up, just don't get in the way of a moving freight train. So, options level bull market, and that's as far as I know right now, that's what we have.
Bull market that's lasted a decade and up 250%. So why get in the way of a good thing? Mr. Last Emperor, same question for you. What is on your radar for the entirety of this week until we all gather here together one final time for the year and indeed for the decade next Monday, sir?
Yeah, guys, I'm definitely watching the market. I was mentioning last week, Andrew, that even with that 23-24 handle VIX going into Christmas last year, right, we still, I guess, have an outside outsized move to the upside in that S&P. So that if that tells you something, right? Straddle was pricing it up or down 23% based on where VIX was, or spikes, or the implied volatility of the spiders, whichever measure you were looking at, right? You're up a lot more than that. So again, right, a definition of higher highs, higher lows along the way, with just continuation to the top side. So, like you said, Andrew, right, bull markets, you don't want to be getting in front of it, right? If you're foaming at the mouth trying to find an opportunity to short, make sure that you're going short at least on confirmation of a stall or a pause. Look for evidence of the fact that sellers are in fact in control before you do so. You don't want to be the first guy trying to find the top or pick a top. I am going to be looking for jobless claims on Thursday. I am off for the rest of the week as well. And I want to wish all the listeners happy holidays and Merry Christmas. And, hope to talk to you guys soon. I'll probably be back on Monday when we get back. So we'll reconvene and see where we end the year.
All right, listeners, that music means that we come to the end, but we're not done yet for the entire year. No. We'll be back next Monday to break down the highs and lows of the year, tell you what we're looking ahead to the future. Also, probably open it up to you guys, see what you guys have on the old brains here to wrap up the year. So just a reminder, no crypto later today as well. No crypto rundown. Actually going to be recording some other stuff here in the studio instead, so don't look for that one. We'll be back for that one soon as well. And, of course, no option block on Thursday, no TWIFO on Thursday, no vol views on Friday, taking the rest of the week off. People here on the network have families, too, they need to go back to and hang out with. So we'll be back next week doing all that good stuff. But before we go, let's go back around the horn, check in with everybody, see what they have cooking that may interest you. Let's start with the Rock Lobster. Mr. Rock Lobster, I'm intrigued. I want to learn more. Maybe I want someone to explain to me how I could write my own puts in outlet mall REITs. Where should I go? What should I do?
Go to optionpit.com. Go to our memberships page. You can see all the goodies that we have and get your option learning on.
There you go. Get your option learning on. Optionpit.com is the place to go. They also Option Pit on YouTube as well. They also like the old YouTubes. If I put out more than we do. Oh, actually, we put out a lot automatically via YouTube, not intentionally. But still interesting stuff. Check them out over there. Optionpit.com is the place to go. And Mr. Last Emperor, if they want to kick the tires and light the fires over there in Fidelity Land, where should they go? What should they do?
Fidelity.com/options. Open an account. Apply for options trading. Of course, once you become a customer, you're more than welcome to give me or any one of my colleagues a ring. I'll be delighted to talk to you one-on-one, whatever it is that you have in mind. Hopefully, you're not going to be dealing with a circumstance where you are short a bunch of deep-in-the-money options going into an ex-dividend date, right? If you want to avoid those types of situations and you want to learn more, give us a call. You could also find us at fidelity.com/coaching for all the options coaching that we do here.
There you go. Fidelity.com/options is the place to go to begin your journey. And if you are a Fidelity client, Fidelity.com/coaching. Also a place to go to continue your journey over there. And on behalf of the Last Emperor and the Rock Lobster, and even Uncle Mike and indeed myself, I want to thank all of you out there for downloading, streaming, and subscribing. Remember, we'll be off later this week. We'll be back on Monday for more of the Option Block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.